Today's overlooked stocks of biopharma business with a fresh bull on Wall Street. George Tsilis joins us, senior markets correspondent, bull from Salt Lake. What's up, George?
What's going on, OJ? How you doing, my friend?
Oh, we got a nice bounce back today. No complaints. Market rallying back. Travere Therapeutics, 17%, George, just because somebody likes it. Somebody wrote a report.
Well, not just that. If you look at the stock, obviously since actually July, the stock is making some headway in terms of price action, and there's a lot going behind the story for Travere, which is a biopharma company. The area of focus in terms of what they provide the marketplace is solutions and medicines for kidney and renal failure and metabolic diseases, which are again pretty harmful to those folks who are facing sort of mid and late stage kidney disease, and so it helps decelerate the atrophy or decay for multiple types of kidney disorders. So if you look at the company, they actually failed to meet their phase 3 endpoints. This is going back to around September of 2023. And now, based upon the new FDA revisal of new data the company provided, they did get a full-fledged green light from the FDA to essentially market their drugs, in which they actually have a partnership with Ligand Pharma, which has actually been generating, pretty generous revenue for the business, about $180 million per annum. So I think this is a game changer pivot for the underlying business. And this is why we're seeing some of the analysts who cover the stock, including Guggenheim, they actually upped their stock up the target to $25. They do maintain a buy rating. And just not too long ago, also Bank of America upped their target on the stock to $19 for a buy rating, as they move into the next phase of distribution of their underlying drug.
Wow. Okay. So market is coming around to it. It sounds like being able to go after a market that's not totally dominated. I mean, we just saw what Summit did with their cancer drug,
Yep.
Kind of stealing some of the spotlight from Keytruda at Merck. So there's always a market to try and do an even better job in areas that are already covered.
Oh, definitely. And I think this company, Travere, actually has some drugs that are very novel and unique to providing care for, like I said, late-stage renal failure. And obviously the market picks up on things, OJ, before news happens. And this is sort of a case in point. But if you look at going back to early July, the stock started to break above its 10 and 20-week respective moving averages. So I'm not saying those are buy points, but effectively they are pretty interesting levels from a technical standpoint when the stock starts to trend to the upside. Now it comes down to, after the fact, what happens. And I do suggest, what will happen is dilution. There will be some share issuances just because of the fact that on that 177 million in revenue, the company's still losing about 300 million per annum in losses. They do about 350 million in cash on the balance sheet, which can sustain them for at the very least a year. But just beware that I do expect them to issue a secondary offering, but it doesn't necessarily mean that the trend is over. In fact, it may have just started, still trending above the 10 and 20-week moving averages with some nice price action today on the news.
Well, the FDA, nod that they got is the type of thing that potentially could set them on a path, right, to where the share issuance isn't a, hugely disastrous event, because if the idea is now that they're kind of breaking through and going to be on a path to real commercialization, that's kind of why you're waiting in this stock, for so long. So, but I hear you too, because it definitely could still be something that dings you in the short term.
That's right. And just quickly, I'll add, if you just look at the estimates for earnings into 2024, there's still a loss of about $2.83 a share. But if you actually fast forward to 2026, they're expected to earn profits of 50 cents a share. So this is a long-term strategy for investors, but just keep in mind in the short term, they may end up issuing a secondary, but it may be something that it has bid up quite rapidly, because there is a visible profit benchmark or break even for the business between 2025 and 2026.
All right. Thanks, George. Appreciate that. Interesting find.